Good afternoon. This is Chris Brecher with the Simpler Trading Free video for Thursday, December 5th, 2024. What's this about? Well, I'll tell you right now, this is how we made money today. I harp with everybody on a 15-minute chart and how when you get oversold on a 15-minute chart, it's how you work off the oversold condition. What I mean by that is, does it work it off by retaining a bearish structure? That first sell-off, as you see, the market went to a new high. On the other hand, this sell-off that got oversold worked it off to the zero line. It's hard to see on there, but the zero line by forming a bear flag. The bear flag then broke to support. So that's how we made money, because we waited. We waited for that pitch. So now what I wanted to show you was this. Number one, at this time of year, you're going to get a lot of like tax loss selling both ways. So I'm going to do a tax loss selling sort of get together in the essentials room the last day of the month to look for some good opportunities. Very last day, you get some exciting ones. Let me show you what we're talking about. This is last year, 2 years ago. That is CROS. Check that out. The last day of the year, it got nailed. And then what happened? It opened up 5 points. We're going to look for a lot more of those, but it works both ways. What do I mean by that? You see the stocks that are up the most for the year start to go down, usually signified by like a doji. So you get RCL up here. You probably have Walmart. So starting to stutter. You got Nvidia starting to stutter. You got a lot of things with indecision candles today. You got Meta. All it did is it's still bullish, but it was too far from the 20. A lot of times these monster stocks don't do much the rest of the year while some of the dogs start to catch up. So just keep that in the back of your mind. I'll be watching that real closely. Now, that being said, forget about all the stuff we're going to do the end of the year. I want to show you this part. This is why the title is Too Many Divergences to Ignore. What do I mean by that? Go look at the Russell on the left. I'm going to take off the MACD. You don't need it right now. That is the Russell on the left. It's still not massive. Don't get me wrong. It's not massive. It's not a massive sell-off. But it is to the 20 moving average, as you see right here. Now, you could take the futures or you could take the cash. On the right, I want to show you a couple of warning signs. Number one, the sell-off in Bitcoin. A lot of times, us traders that have been doing this years and years and years, me 44, things have to hit a round number before they could go down. So it hit a round number, and before it went down, the stocks within it were getting destroyed. This was already selling off 20 points. This was already big selling off. So selling off about 30 to 40 points. So you're starting to see those leaders sell off, including Bitcoin. That's one of the divergences. The other divergence is the transports on the right that have decisively broken their 20 moving average. In fact, the transports are getting near the 50. Getting near the 50. So when you see that, and on the left, I'm going to put the RUT, the non-24-hour small cap. You see it's at the 20. So you got this under the 20 on the right. You got this under the 20 on the left. On the other hand, look at the SPX. Wow. That is 100 points over the 20 moving average. Now, there's another thing that's important when it comes to this, and that is definitely where these indexes are in relation to where they were a week ago. A week ago. So where was the transports? Right here. That is November 20th. They're there. On the right. Where is the Russell? Well, right here. That's November 22nd. Right here. Right over here. Right there. So now what I want you to do is just at the minimum. I'm not saying Chicken Little here and the markets are going to crash. Where were these? November 20th, you don't want to know. They're way down here. But at the minimum, you're talking about a fill of that gap at 60.50. How about the NASDAQ on the right? Well, that would be here. That's ugly. 200 points. Why shouldn't it be? Why couldn't it do that? If the Russell's done that in the transports, why can't it? So that's what we're going to be watching the next couple of days, those divergences. End of the year. Usually you have a little overbought sell-off and an outperformance by the Russell. For the Russell to be down this much is very rare. So let's just see what happens in the next couple of days. Take care. Have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.